Bjóðu velkomin á svið Shaxson, rannsóknarblaðamann og höfund.
Hello, thanks. I'm delighted to be here today. This is actually my first time in Iceland, unfortunately. I have looked at bringing my family here in the past, but the prices were quite scary. And I think that's related to what I'm talking about today. So I am, by long background, I'm a journalist, but I also am the co-founder of this organization, the Balanced Economy Project, which is an anti-monopoly organization. Our focus is kind of international, not in the United States, and we mostly focus on Europe. And we are, I think we were the first kind of pure anti-monopoly movement with an international focus to emerge. So the title of this presentation focuses very heavily on competition. I'm going to give a kind of, is competition a good thing? It can be a very powerful force for good, for sure, and it often is. But it also needs to be treated with great care. And on any, as the presentation just said, in any football game, you need a good, strong referee. And so a competition authority is absolutely essential to shape the rules of the game, because you can have very harmful forms of competition if you're not careful. And in my experience, when certain forms of financial interests are involved, that can be especially harmful. So I'm going to give a quick presentation about the problems, the difficulties, the issues. This has a kind of quite a strongly European perspective. I don't know very much about Iceland yet, but I'm finding out a lot. And one of the things I've learned so far is that people here are much more conscious of competition and the competition authority and competition issues than in other countries, which on one level is very heartening that people are alive to this, but I think on another level, it suggests that there is a real serious problem here. And then afterwards, I want to give some sort of hope about some things that are happening in the world that are actually surprisingly good. And, we're all worried about the future, but I think there's a lot to be hopeful for. So this, again, this goes, connects with what was being said earlier in the little presentation. I'm going to talk about a survey that Oxfam Germany did of suppliers to supermarkets in Germany. And one of the things that they spoke about was the breakage allowance. So if you break a bottle of something in the supermarket, you don't have to pay for it. And you might think the supermarket's being very generous, but in fact, what this is the supermarket has power to push all the risk and the costs onto their suppliers. So it's the supplier that will pay for that. And in fact, they came up with a list of 40 incredible conditions that supermarkets were able to impose. Some of them, they're just completely arbitrary. The supermarkets, they have so much power. Again, as was being said, some of these suppliers, it's so existential for them. If they lose the supermarket contract, they're dead. So they have to accept what they're given. And so there's things like they have to pay the wedding bonus. When the supermarkets merge, they have to contribute to the cost of those, even though that's going to hurt the suppliers. Birthday bonus, supermarket anniversary, just like, we're going to charge you for that. Political partnership, have to pay for lobbying costs for the supermarket, which may well, again, hurt the suppliers. And the next one, the open book demand, is a really nasty one, where basically suppliers have to hand over essentially all their data. So the supermarkets can work out how much economic surplus these people have left, and they can then deploy their arbitrary fees and so on to take that surplus. And this is a very increasing feature of the platform economy, especially when there's so much data involved. You really get a sense of a big business like a black hole with lots of kind of stars and planets orbiting around it, kind of trapped in their gravity. And they are operating on very low kind of margins. And they are maybe very fiercely competing between each other on, sellers on Amazon platform, for example. But the black hole at the middle of it is making all the profits. It's taking all the surpluses from all these small players. And if you try and put subsidies into this system, let's support small farmers, or let's support small suppliers, there will be an extra surplus that can just be taken if the monopolist is powerful enough. So this is just some indications. This is, so how much of Amazon's profit is excess profit? That's some work that we're going to be doing in the future. But here are some indications. This is just the price of sending a standard parcel. They've been sort of doubling over the course of five years. You would expect a big company like Amazon, as it gets bigger, there'd be more economies of scale and the price would go down. But no, the price is going up dramatically. And the Amazon's cut of sellers' revenue, this is in the United States, it's now about 50%. So when you buy something on Amazon, half of that goes to Amazon. Some of that's logistics and stuff, but it's the change over time that illustrates that this is the exertion of power. This is a big company using its power to just take money away from all the different players, whether it's the consumers on the one side or the suppliers on the other. So I like to think, many of us like to think of an hourglass when we think about this. You have here, this is a very simplified version of the food system. You have the farmers at the top producing all the food. You have the consumers at the bottom receiving it. And in the middle, you have at the neck of the hourglass. And as you get mergers and acquisitions and consolidation, fewer and fewer companies, it could be supermarkets, it could be in the global commodity trading sector, it could be among the processors, wherever the sort of market niche is, you have had over the last few decades a narrowing of this neck until you get a real kind of choke point. Another analogy is like a toll keeper or gatekeeper. So someone, you have passing traffic on a river and someone's got a gate there and they only open the gate when you pay them a lot of money. And so that's increasingly what's been happening around the world in the places we've been studying. Certainly in the United States, in Europe, I think in many other countries, it's been that way for a long time. And it's tied up with, particularly in lower income countries, it's tied up with kind of oligarchy. The more kind of oligarch-ruled your country is, the more likely you're going to have this, the cement sector will be locked up by one person, or banking will just like three giant banks will dominate everything. And they're able to extract from both sides, from the kind of producer side and the consumer side, and take it all into the middle. And often it's the low tax middle, so you can take that surplus and put it in a tax haven, so all the tax disappears as well. Just to give a recent example I was looking at, there's a merger of big food traders, Bunge and Viterra, and there was a study of Canada. This merger would cut like 770 million, 600 million US dollars, I think. But that's just in Western Canada. So globally, a lot more money is going to be sort of taken out of this system and given to these shareholders. But that's a 35 billion merger. Every year, total mergers are like 3.5 trillion, so vastly more. So there's an enormous amount of market power steadily being amassed around the world. And obviously this affects prices. And again, I think everyone in this room is probably very conscious of this in Iceland. I don't know what Iceland's graph would look like, but this is some figures that Jan Ikut, who's a well-known economist, studied recently. And this is markup. So this is the difference between the cost of producing something and the price you sell it at. And back in the 1980s, markups were like 1.1, 1.2. So in other words, 10 to 20% above the cost of production. So there's like a reasonable profit margin in there. But now that's gone up to 1.6. That's the sort of global figure. So yeah, my example is a pizza that used to cost you 12. With kind of inflation adjustment, it would now cost 16. But there's that €4 difference that we're talking about. It's like a kind of private tax that they are levying. Nobody voted for this tax. It's just these people have enough power to charge us private taxes. And there's some research by SOMO, which is a very interesting Amsterdam-based organization, a Center for Research on Multinational Corporations. And they actually provide, if you're looking for sort of analysis of, like accounting analysis of big international firms, if you've got an interesting project, they have a thing called the Counter, which provides free sort of analysis if you have something you want to look at. So on prices, one of the things that I've been looking at and we're kind of fighting on recently in partnership with the Unite Union in the UK is that there are 4 mobile network operators. These are the ones that run the infrastructure and the spectrum. There's a lot of other ones that kind of piggyback on their operations, but there are just 4, and they want to merge from 4 down to 3. So we looked at all the international research of like what happens when you merge in a national market from 4 to 3 operators. And it was so absolutely clear every time you get a big rise in prices, you get no improvement. You know, they claim all these efficiencies. If we merge, we'll be more efficient and we can share things and there won't be so much duplication. It doesn't happen. When they have more market power, when they have enough more market power, they don't need to worry about that. They stop. They're kind of too big to care, as they say. All they worry about is squeezing out money, prices rising, that money is taken out and given not to consumers, but to shareholders. And in Britain, it seems that if this merger goes ahead, the prices for the lowest cost packages, the smallest mobile data packages, will double. And our competition authority, which has generally had a very good reputation internationally, is now coming under intense political pressure from big global vested interests. And so we are worried that this merger is going to happen, even though the competition authority knows and has said that this is going to be a terrible idea. They're trying to create a kind of loophole to let this thing go through, and we're trying to fight to stop it. So wish us luck with that one. So I wanted to give an example of children, of competition not working. We also did a study on children's social care. I want to, just to kind of break things up a bit, there's going to be a question and answer session later. I'd like to talk about it then rather than now, just so that I'm not droning on for too long. So there's been also a lot of recent work on how monopoly power harms workers, harms labor. And there has been a lot of study, particularly in the United States. But this book that I'm highlighting here, again, it's the same economist, Yanni Kut, who wrote a really great book about this. But he makes the point that, so there's kind of two problems here. One is what they call monopsony power. So when workers don't have a choice, like who they can work for, then that's obviously very problematic for them. So in the UK, for example, there are these huge financialized companies that are buying, like they will go to a town that's got 3 or 4 veterinary services and they will buy them all. They'll keep their identities separate so everyone thinks they're still separate, but they'll buy them all, and then anyone in that town who's got veterinary specialization won't have much choice. They have to work for one of these companies, and guess what? Their conditions get worse. So that's monopsony power, but that's not actually the main problem. The main problem is about the general monopolization of our economies, and that affects the share of the capital versus labor share. So profits rise as a share of the economy, and that pushes the labor share down. There's less kind of output, more profits, and workers get squeezed. So it's a kind of generalized effect, and it's very powerful. And Yanni Kut was putting it on a global scale. He was talking about annual damage to workers of sort of 6 to 8 trillion US dollars, which is, to put it in context, the amount that they estimate of tax that's lost to tax havens annually is about 500 billion. So this is like an order of magnitude bigger. You can have arguments about, to what extent is that down to competition and technology and globalization, but for sure, market power is a central factor in this enormous transfer of wealth, this upward transfer of wealth. There's also been some interesting research on the relationship between monopoly power, market power. When we say monopoly power, we're just talking about extreme concentrations of power, and fascism and the Second World War. And after the Second World War, the Allied powers put in place, led by the United States, put in place some very strong anti-monopoly. They had they called it decartelization. It was the 4 Ds: denazification, decentralization, deconcentration, and decartelization. And there was another one, but they recognized that the extreme concentration of power had really profound effects on, it certainly wasn't the only reason why Hitler was able to come to power, but it was a very powerful kind of impetus to what happened, and enabling him to consolidate power as, you've got all this kind of centralization, and then you can control centrally what's going on in the economy, and that has an enormous political effect. We can talk about this later. There's a whole laundry list of harms that come from this excessive market power, higher inequality, what we saw about the crushing of small businesses, entrepreneurship, the undermining of democracy is an absolutely huge one. There are many ways in which monopolies threaten the state and make the state unable to do the things that it wants to do for its citizens. There's a whole story to be told about corruption. And yeah, so there's a whole range of monopoly power harms. So how did we get here? I'm going to talk a little bit about, obviously there's the pressure of money and big vested interests, that's always been there, but we are talking about a really bad set of economic ideas, and the kind of leader of these ideas is a guy called Robert Bork, who is a nasty piece of work. He wrote a book called The Antitrust Paradox, which basically said, so until then, US regulators, so this is all happening in the United States at the time, it came over this way later, but he was, at the time regulators were saying, we need to worry about the structure of our economy, we need to worry big concentrations of power, if they're too big, that's a problem, we need to break them up, we need to regulate them more strongly. But he was saying, don't worry about power, don't worry about the interests of workers, don't worry about the interests of citizens or taxpayers, don't worry about democracy, don't worry about the broad public interest. Just narrow your focus down to just two things, and one is the interests of consumers and then economic efficiency, and we're talking Chicago School economic efficiency, and this is a very narrow thing that, so in this case, the idea was that big companies, they have economies of scale, they're more efficient, these efficiencies will then trickle down to consumers, and everything, if that happens, everything will be fine. So don't worry about all these other things, because workers are consumers. We don't need to worry about them. And of course, there are so many crazy aspects of this, but the big money wanted it, and they started funding think tanks, free market think tanks, to push these ideas. They called themselves free market, but what they were really arguing is we want to lock up markets, exactly the opposite of free markets. This is, I think, time-wise, we probably don't have to. It's this kind of little joke about, I can send out this presentation later if people want to see it. But anyway, so they use these kind of, don't worry about what this graph means. If you're not an economist and you're not familiar with these things, don't worry about what it means. But it's this kind of, they were saying this is how the world works, these kind of really sort of precise graphs, and if we can just measure it correctly. And they can manipulate this thing with assumptions. So whenever there's like a merger, two big companies want to merge, they can use one of these graphs and they just change the assumptions and they will say this is efficient and so this merger must go through. So all the mergers that were blocked in the past, suddenly everything was unblocked and you just got companies merging and merging. And they spread to Europe. And people think of the European competition authorities as really powerful anti-monopoly fighters. And they have their moments and they do some good things. Recently, the European Commission won their case where 14 billion euros is going to have to be, Apple is going to have to pay 14 billion euros in back taxes to Ireland, which was a real victory. So there are some victories, but in terms of merger control, under the influence of these Chicago School ideas that came from the United States, they've only blocked out of 6,500 mergers notified to the European Commission since 2004, only 0.2% of them were actually blocked. This ideology has blinded them to all the harms, and some really, really bad mergers have gone through. And this economic efficiency game is what allowed this to happen. I'm just going to check how are we on time. Okay. So about 15 years ago, a book came out, Cornered, by a guy called Barry Lynn in the United States. And he basically said, hey guys, everything in our country is monopolized. And it's incredibly harmful. And we've still got these anti-monopoly laws that date back from 1890, from 50, 70 years ago. They're still on the books, but they're just being ignored, so we can just use them again. And people very quickly started noticing this kind of theme that nobody had really, amazingly, people hadn't really been aware of before, or they'd been blinded by this ideology. And it started getting really serious media traction. And I noticed it about 2016, 2017. And this piece came out in the Yale Law Journal by someone called Lena Khan, which was basically arguing that Amazon was a monopolist and we had the laws to do something about it. And among the things we should do about it was break Amazon up. And the whole economics establishment was horrified, like, this is crazy, what's going on? But this article got a lot of traction. And Barry Lynn, who wrote that book, Cornered, and Lena Khan and a few others, they set up a thing called the Open Markets Institute. So this was a civil society organization that was pushing for some radical, they were really radical, pushing for radical economic change. And so this, like, I noticed about 2016, and you could start to see politicians getting interested. And finally, you had in 2021, that's Lena Khan there. She was appointed chair of the Federal Trade Commission, and she's now, so this is like a civil society movement that has gained really serious, first of all, public traction, and then now policy traction. And she's in place now, and a few others, Jonathan Cantor at the Department of Justice, are now have real power. So I just saw this on Twitter the other day, but this is nearly half of the US S&P 500 by market capitalization is now under antitrust scrutiny. And it's these people who started out in radical civil society that are doing this. And of course, we don't know what Trump is going to bring, but there are some Republicans who agree with what's going on. So, yeah. Now you have the Department of Justice has just started winning a case. It's not over yet, but they are talking about breaking up Google. There's another Department of Justice case to do with advertising. Again, they're talking about breaking it up in a different way. You have the European Commission is now timidly talking about breaking up Google. This picture here, the example, is from a European Commission document suggesting that they are semi-serious about it, but there are lots of people in the establishment who are horrified at the idea. The UK actually was the first country to break up a big tech firm. Now that sounds dramatic. It was just a breaking off a little fragment called Giphy, which was this little thing. But it was the first time anyone anywhere had broken up a big tech firm. So what we've had is a real change in ideology. The ideology it was unquestioned until about 10 years ago. Nobody was questioning it, and it was just, this is efficient, big is efficient, we need to allow consolidation, mergers. The ideology has now substantially shifted. You have massive public understanding of this in the United States. So Taylor Swift fans were horrified by the fact that when tickets went on sale, they couldn't get them, and there was absolute chaos, and that's because there's a monopolist called Ticketmaster, Live Nation Ticketmaster, which was dominating that. Recently in the UK, Oasis fans had the same problem with Ticketmaster, heavily monopolized. You don't have the same level of consciousness in Europe yet, or the UK, as you have in the United States. I'm glad to see that in Iceland there's a much higher level of consciousness about these issues. But there's a whole world to be won here. Sorry, this is a duplicate slide. And I'm just going to offer some tentative suggestions. It may be a bit arrogant of me to suggest to Icelanders what might be useful to do, but I'm just going to throw a couple of ideas out there. One is, I think an anti-monopoly movement of some kind is very useful. It can be done. We have a very active and lively, I've got on my phone here this morning probably, I don't know, 20 or 30 messages from different people in this movement, all excitedly doing projects. There's a real sort of energy beginning to build up. So I think there is great potential for that here, particularly in a society where people are so conscious and angry about some of these issues, that I can only encourage more work in this area. It can yield really huge dividends if it's successful. And my second solution is, I think that competition authorities, the referees in the football games are absolutely essential. And as I understand it, the resources for your competition authority have fallen recently in real terms, while obviously economic activity has grown. So they are kind of, the referee is getting weaker. So I think this is a useful way to think about addressing the problem, is trying to push for increase in resources for this referee, that needs to protect the competitive process, but also I don't want to just talk about competition, because competition, I want to discuss competition because it's, as I said, it's good and bad, but it needs careful handling. But also I think it's very useful for the labor movement to engage in a way that shapes the competition policy agenda into forms that are pro-labor and pro-people and pro the planet. So that's what I hope maybe could be useful in Iceland. And I'm going to finish there. Thank you very much. And we're going to have a Q&A now.
Bjóði velkomin á svið Höllu Gunnarsdóttur. Hún ræðir við Nick samkeppnismál.
One more. Think about the streaming. Wow. Thanks, Nick. That was brilliant. We first met in Austin, Texas, at a conference about the Green New Deal. Now nobody talks about the Green New Deal anymore. There you were talking about the finance curse, your book. And some people here may remember that you joined us for a webinar under the theme, The Right Way Out of the Crisis, the rétta leiðin, which we did during the COVID. It was a webinar because it was during COVID. And as I was just getting my head around your ideas about the finance curse, where you were telling us that finance is good for society until it reaches a certain point and then it starts harming us. And then I remember you mentioned like that you were thinking about anti-monopoly. But you had been doing a lot of work on tax justice and on tax havens. So what brought you from tax havens and tax to competition and anti-monopoly?
Yeah, it was, so I'd been watching what was happening in the United States in terms of anti-monopoly. There was so much energy there, and it was so exciting. And why haven't we got something like that over here? And I actually wrote an email, and first of all, I wrote a blog for the Tax Justice Network, just trying to conceptually link the issue of tax havens with the issue of corporate power. And I think the title was something like, if tax havens scare you, monopolies should scare you as well, and vice versa. So I wrote this and just kind of published it and forgot about it. And then I decided to get in touch with Barry Lynn, the guy who wrote, he's kind of like the godfather of the anti-monopoly movement in the United States. And I said, do you know anybody over here who's doing anything? And he said, no, not really. Why don't you set something up yourself? And I was like, oh, that's a bit difficult. But then a competition lawyer called Michelle contacted him quite soon afterwards and said, do you know anybody over here who's doing anything? And he just put us in touch, and we started talking to each other. And it was and we very quickly, like, nobody else is doing this. Why don't we set something up? So we did. And it was very complimentary because I'm kind of like a journalist by background, and she's a competition lawyer. And she's left now, but you know, the organization has kind of developed into an anti-monopoly organization. So it's kind of, yeah, it happened. It's not quite a series of coincidences, but just this is what happened. Yeah. And once it's one of those things where, you know, once you see the potential, you're kind of driven to do it. Like, I just feel like I have to do this. I can't, you know, I'm going to have to stop working in tax justice, even though tax is fascinating and, you know, there's so much more to say always.
I still like it that you use the word tax for the money that we pay to monopolies or to big corporations because you would, at least in Iceland and probably most countries, you would have a lot of resistance against new taxes.
Yeah.
But where is the resistance against the more and more and more we pay to the ultra rich?
Yeah. Yeah, I think it's because it's so hidden. I think it's people, they can feel it. You know, you can feel that these big companies are too powerful, and you feel angry that the prices are high, and you feel that there's a reason. But I think people aren't quite there in terms of like making the exact connections. And I think it does require, you know, some careful studies to illustrate this is exactly the problem and this. So I was talking about children's social care. I said we'd talk about it now. So we did a study, we got a fantastic accountant to do a study into children's social care in the UK, and he looked at the biggest companies providing children's social care. So it's all been nearly all been privatized. And there are these enormous kind of private equity companies with really horrible financial models that have piled in. And we worked out just from accounting that they were earning an excess £22,000 per child per year, and that was excess. So they had normal profit, but then we had a method for calculating an excess profit.
So we're actually importing this model in Iceland now.
Tell me.
So yeah, so we imported the model in foster care and social care for children, where there are now private companies that host them, and different municipalities in Iceland have been speaking up about this and worried about the extensive amount of money that they pay to private companies to take care of children, and they run for profit. And then we're also importing it now in building nursing homes for the elderly, where the government has promised that it will pay market rent to whoever is going to build that. This is, of course, they went to the UK to find the model and brought it here. But what do you think that means for us in Iceland?
Well, obviously, I mean, it depends on the model. So, you know, you could have a model of just like a family-run care home with a few employees that is independent, that may be fine, you know, maybe providing good care at a reasonably low price. But what we were looking at is companies with these financial models. It's like a crowbar. So it looks like investment coming in, but it's actually a crowbar to break open the money box and get the money out. I'll give you a very simple example of the private equity playbook. It's called the dividend recapitalization. And it's so simple, you kind of like, can this really be true? But what they do is, so a private equity company firm will buy a company that makes whatever, you know, manufacturing, or it could be children's social care or whatever. They buy this company, and then they tell the company, because they own it now, okay, we want you to borrow 10 million euros. Okay, so that company borrows the money. And they say, now pay us that 10 million, and we'll go and spend it on yachts and racehorses and, you know, whatever.
Everything else you need.
Yeah, what we need. But you are responsible for paying back the debt. So it's on your shoulders. So that company, if it's children's social care, they will have fewer carers, they will have to cut corners, they won't do renovations on their buildings. They might then say, okay, we know how you can run your financial affairs through tax havens to escape all the tax. We can, you know, all your suppliers, we can kind of screw them over. And so they just kind of like squeeze this company to pay the debt. So it's like using debt. You know, it looks like investment going in, but actually this game. And so you're kind of separating the responsibility from the profit. So this person has no, if that company goes bankrupt, it doesn't hurt the rich person, it doesn't hurt the private equity fund at all, because they just
And private equity is quite excited about getting into public funds, yeah?
Yes, private equity is a very dangerous model. And I did some work for Public Services International Union on the use of private equity in the care system, and we laid out some of the tricks that they use. So this was one of the tricks that we described. I can give you the details if anybody's interested.
So I'm going to bring us back to competition. So ISE put out a survey, so maybe we can get the slides up from the survey.
Can I just say,
yeah?
Linking this to competition. So so I was giving us an example of harmful competition. What you have is when these companies that have fantastic access to finance, when they're so extractive, they can make a lot more profits. So if there are like children's social care companies being sold in this market for children's social care, which is a weird thing on its own, these people who have all these extractive games can pay more than anybody else. So it's like the worst actors will win. They're the ones that will. So the competitive process will drive the worst actors to become dominant.
Right.
And if you don't have, you know, an authority that's stopping this, that's preserving actual markets and fairness, then these markets are going to tip from something that may be, I mean, you may prefer, you know, completely public. You know, you can make an argument that it should be all publicly owned, but if you're going to have a private sector one, it's not just privatized, it's like privatization on steroids, and the competitive process will always favor these companies that have access to this weird form of finance and these kind of tricks. And the competitive process will create something much worse. So
and then suddenly maybe I want to move with my family to the countryside and think that we can foster some children who can be out in nature and close to animals and so on. Then I'm suddenly competing with those big companies.
Yeah, you may be. I think, it can be a problem,
Yeah, so you bring it down to competition. But we can see here, so when Icelanders have asked if they think there is enough enforcement of competition in Iceland, there is 2% to think it's too much. 3% to think
who are they?
it's... who are they? Are they here? Raise your hands. But most Icelanders seem to think that there is not enough enforcement. You mentioned earlier that the general public in some other countries you worked in would maybe not be aware of its competition authority. I think all Icelanders know Samkeppniseftirlitið. I think so. But what do you make of this? Is this do people in other countries think that there is sufficient competition enforcement?
Yeah, I mean, there was a survey of UK small businesses, and only half of them, this is like a few years ago, only half of them had even heard of the Competition and Markets Authority. So there's not, and among the general public, it'll be much lower, because that's small businesses who need to know about it. So the consciousness is much lower in the UK. But yesterday I had an article in the Guardian newspaper that was looking at, so the British government, Keir Starmer, had this investment summit, and it was a horrible event where he was talking about ripping up regulations, ripping up protection so that Google and these other amazing companies can come in and exploit Britain. And that's his, it's kind of like the Tony Blair model. And, but when I was researching that, I looked at, there was a survey there of, it was not about competition regulation, but it's just about regulation more generally. So there's such a disjuncture between the political classes who are saying we need, regulation stifles growth and we must get rid of it and be free, and the actual general public. The survey of the general public was that like 79% of people felt that, strong regulation was essential for, they don't want freedom from regulations, they want protection, from these really dangerous kind of political forces.
But that brings us to the next slide, which will, where Icelanders were asked if they think there is sufficient regulation to create like a positive competition. And most Icelanders don't think it is. But I would still think that the mainstream political debate is more ruled by the idea that we need to deregulate, something similar to what Keir Starmer is doing. Yeah.
So there's such a and that's one of the great problems of democracy, is this gap between what the political classes, the elites want, and what the general public wants. And the general public is basically right on this issue, and I think this distance is getting worse. And they talk about freedom all the time. We want freedom for business to innovate. But I see it. I kind of, in a crude way, I describe it as the difference between freedom for billionaires to freedom from billionaires. Like, they're talking about two different things using the same word.
So we want freedom from billionaires.
Yeah, and they just say, we want freedom. And like, oh, that sounds great, because we all want freedom. Nobody wants to be trapped, but what do you mean by freedom?
Yeah, who's freedom?
Yeah, and so regulation is, I mean, I like to talk about regulations as protections, as kind of things that have people's back. But and another thing, there's a good quote from, I think, John F. Kennedy, who said, when you take down a fence, you should really work out first why it was put up in the first place.
Yeah, that's a good quote. Keir Starmer mentioned competitiveness. Competitiveness was also mentioned here in the conversation about energy and Mario Draghi's report. What is competitiveness and how does it serve us?
Okay, so there's a lot of confusion here. So there's competition in markets between private actors, and that's a whole complicated game, but it's meaningful. It's a meaningful term. We know what it more or less means. And then there's competitiveness, which sounds similar, but what we're talking about here, when they use this term, they're talking about the competitiveness of a whole country or of Europe as a whole. So Mario Draghi's report was about European competitiveness. What does it mean for a country or a region to be competitive? That's a completely different game. Just to give an illustration of how different it is, if a company, private company fails, goes bankrupt, it kind of disappears, and it's sad, but that's the end of it. But a country, what does it mean for that? A failed state, like it's a completely different creature. But people, politicians, they love this word. We want to be. Who wants to be uncompetitive? It sounds great. We want to be, but what does it mean? And it turns out it is just an empty vessel, that term, and into that vessel they can pour whatever they like. And in Britain, they've used it for the financial sector all the time. We need a competitive financial sector, and all the political classes, yeah, that sounds great. But in reality, it means take resources away from other parts of the economy and give it to the financial sector so that they can compete. So cut their taxes, so take taxes away, allow them to be, have more market power, monopolies, so they can take money away from consumers, allow them to exploit workers more, so that all of these transfers of resources away from other parts of the economy, give them to these people so that they can compete. Mm-hmm. And so that's the British version, is very kind of financial, and now Keir Starmer. So now, historically in Britain, finance has ruled everything. But this investment summit that's just happened, it's now finance and big tech, and particularly big tech, they've kind of joined. So now we need big tech, we need to just do what they want. Eric Schmidt, the head of Google, was in London, and he had an interview with Keir Starmer where he sort of, I think only half jokingly said, you need to have a minister for anti-regulation. And they all thought that was very funny. And Keir Starmer was saying, we need to roll this out across government. We need to. And that's in great contrast to what Joe Biden did, because when that picture of Lina Khan signing that, becoming chair of the Federal Trade Commission, he also issued an executive order mandating a completely new, and he named that guy Robert Bork, that horrible guy who had that. He said, this guy was wrong. We need to completely turn away from it. We need a new philosophy, and all government departments now need to take this on board. So it's now a big fight going on there, and there's a long way to go, and there's a lot they haven't achieved, but it's a really kind of hopeful thing. Mm.
I also noticed that you mentioned that we should work for competition that's pro-labor, that's good for society, that helps us and supports us. The Icelandic Competition Authority has done some excellent work recently on the shipping industry, and the cargo industry. And there's actually we have a number of how much those big companies owe us after what they've extracted by having by having their illegal conversations about what prices should be, and dividing the country, and you take this part and I take that part. Of course, we're an island, so that's very impactful. But we also have the Competition Authority insisting on more competition in healthcare, in supporting companies that want to do whole body scans that healthcare professionals say that's not really what people need for their health. That's not really good for public health. But they're and this is all government paid, so it's not that they're going to make the patients or actually the customers in this sense pay, but we're supposed to pay. So taxpayers are supposed to pay. Yeah. So can you tell us a little bit more about where is competition good and where is it not good?
Yeah, this is actually a question. You're asking a very deep question there, because it's something we've thought about a lot, and our answers are still a bit case by case. But I think what you need to do is think about scale. So if you are up at the competition authorities are very strong against cartels, agreements. So sort of whispering to each other, have lots of different companies, they all whisper, let's all set price together. But mergers, that statistic I gave, are fantastic. Right. They can merge. But a merger is just like a legalized version of a cartel. It's just like, if we can't collaborate, then we'll just merge, and then they'll get off our backs and let us do exactly what we want to do, and it's a reinforced version of a cartel. Now we've got the market power, and so the reason that they tend to go after cartels but not mergers is that cartels tends to be smaller scale stuff. So collaborations, a trade union agreement is a collaboration. Workers collaborate, they come together. And so the lower the level of, kind of at which the collaboration happens, the more grassroots it is, the better it is. And the higher level, the more kind of corporate and capitalist it is, the more dangerous it is. And so we kind of, in terms of competition, we kind of we focus our energies on, what Google is doing and what, the biggest companies are doing, these four telecom companies merging. But the Competition Authority in the UK also goes after, there was somebody who was selling Justin Bieber posters and did some collaboration with someone and got hammered. And so we just don't think that's a priority. And so competition, another way of thinking about it, there's a I don't want to get academic, but there's a guy called Fernand Braudel. I think he was a French philosopher, but anyway, he compared it to a house with 3 stories. So on the ground floor is the kind of material conditions of life, food and shelter and stuff like that. And then on the first floor, there was real competition. So think of it as on the Amazon platform, people selling things on the Amazon platform, the third-party suppliers, as they call them. And they really do compete fiercely with each other. They sort of shave their prices down to the lowest level so that they get the best deal and they get into the buy box, and that's the real competition. But then the level above that is Amazon itself, the company. And that's a completely different ballgame. And that's not really competing at all with anybody. I mean, there's eBay and stuff, but it's not. This is a completely different ballgame. And that's the stuff that we need to worry about the most. These guys, the sellers on Amazon or Uber drivers or lots of, these kind of stars and planets in the orbit of a black hole. Obviously, you need to watch what's going on, but it's the black hole itself that really is what the competition is.
So you're telling us to focus our energy on the right places. But just very briefly, what's the relevance for Iceland? I mean, those Amazon, Google, those big companies, they're not hosted here.
Yes.
So what's the relevance for us?
Yeah. I think you need to think about an Icelandic scale for that. So shipping is an example of that. I also think that in our anti-monopoly movement, it is very enriching to have lots of different experiences. This is a slightly different kind of answer, but I think if you are building an anti-monopoly movement, plugging into what's going on elsewhere can be really helpful. You can help us, and we can hopefully help you in kind of, because no one in the UK can take on Google. But if we get together in Europe and influence the European Commission and national competition authorities to put pressure, that's kind of the strategies that we're using. And we are having some limited impact so far, but we hope that, particularly if we can change the public conversation, we can actually start to have, this is going to happen over years, mate. It's going to take years and years before we really get traction, but I'm hopeful that we will.
Brilliant. We're running out of time. I wanted to ask you about profit-driven inflation, about one of my obsessions, which are price controls and other ways to kind of tackle big businesses. But we can maybe do that in the coffee break.
Okay.
Nick Shaxson, thank you for coming to Iceland and sharing with us your thoughts and experience and research. Thank you.
Thanks for inviting me.